How to choose a mutual fund scheme. One of the first dilemmas you face as a startup investor is where should you place your money? But with so many options barging the market, it could become difficult to choose which option perfectly fits your bill. Mutual funds often come to your rescue in such a situation, as they offer you the best of both worlds. That is, you stay well invested in the markets without having to worry about tracking your investment on a regular basis. But then, how do you pick the perfect mutual fund scheme? There is no correct way to answer this question. But then, you can often draw out a criteria based on your needs and investment objective. However, there are certain checks you should maintain as an investor before investing your hard-earned money in mutual funds. Entry, exit, and overhead loads, expense ratio, turnover ratio, fund manager tenure and experience, performance ranking. Looks confusing? Why don't we simplify it for you? Firstly, the investor should check the load structures on mutual funds. Nowadays, mutual funds are not allowed to charge entry loads. However, some schemes still enforce some other loads and overheads. Always stay alert about such additional expenses, since they eat away from the actual returns investment. Be aware about the expense ratio of the specific scheme. This includes the annual fees charged by all funds, namely the management fee, the administrative costs, and other operating expenses. Let me give you one pro tip. Any scheme with an expense ratio below 1% is always an attractive proposition. The turnover rate should also be considered before investing money in any mutual fund. Knowing the historical turnover of a mutual fund helps an investor determine the fund's expected performance in the future. A high turnover results in increased costs for the fund and decreased returns for shareholders due to shareholders paying spreads and commissions when buying and selling stocks. It is important for investors to know about his fund manager tenure and experience. Fund managers play a very important role in the fund's performance. Though it is a process-oriented approach, but still the fund manager is the ultimate decision maker, and his experience and viewpoint counts a lot. You should know who the fund manager of the scheme is and what his past track record is. You should look at the performance of other funds which he is managing. Lastly, how has the fund performed? It is time to get into specifics. Take a look on how the scheme has performed over a long period, preferably during different market cycles. Always look for consistency over outperformances during different phases in the market. Past performance is not a window to the future, but it is still the best available indicator. We are pretty sure that if you maintain these simple checks, your mutual fund scheme could provide you with strong returns over time. Till then, plan smartly and stay well invested. For more such videos, please subscribe to our channel and visit our website www.edelweiss.in. Happy investing!